Dow gaining nearly 230 points to close at a new record. The S&P notching its sixth straight day of gains, while the tech-heavy Nasdaq fell 0.5%. 93 stocks, or nearly 20% of the S&P, hitting 52-week highs today, including a number of all-time highs in rate-sensitive housing plays like D.R. Horton, Lennar, and Pulte Group. All this ahead of Wednesday's Fed decision, where markets are pricing in a more than 60% likelihood of a 50 basis point rate cut. For more, let's bring in Natixis lead portfolio strategist Jack Janasiewicz. Jack, great to see you.
Well, thanks for having me.
So which camp are you in, 25 or 50? Because 50 is getting more crowded these days.
Yeah, we're in that crowded camp. We're in the 50 camp.
And so there was a concern initially that a 50 basis point cut would send a bad signal to the market that the economy is actually worse than expected. You don't think that's the case anymore? It's now accepted and it would be fine.
Yeah, I think that's a little bit of an overblown concern, because when we take a look at really some of the peripheral data, whether it be retail sales, look at credit card spending coming from the banks, whether it's Bank of America or JP Morgan, looking at layoffs, they're just not happening. And all of this still, I think, points to the fact that we're cutting rates simply because inflation's down, not because we're about to basically roll into a recession.
JJ, it's Tim. Thanks for joining us. So I guess the bottom line is, if we've got 242 basis points of Fed funds cuts to the end of next year, if the Fed actually ends up doing that, isn't that bad for the economy? And are equities mispriced here, or bonds mispriced? And I do mean treasuries. I don't mean credit.
100% agree. And I think our base case is something along the lines of what we saw back in 1994, right? A mid-cycle adjustment. And any sort of mid-cycle adjustment, I think, would lead us to certainly some rate cuts in here. But if you're looking going out to something like close to 200 basis points plus, you're certainly not pricing in a soft landing at that point. So 100% agree. Our base case for a soft landing, and if we get to 200, we're probably a little more trouble than what we're thinking about.
Mr. Janasiewicz, we try not to play politics here, but this will be politicized if they go 50. I saw Richard Fisher on Squawk Box last week. One of the reasons he didn't think they would go is because of exactly that. One side is going to say, you're trying to help the other side. Is there any semblance of, is there any truth to that idea, or did they even think about that, do you think?
Listen, the Fed is always going to be the punching bag, whether it be for the economy or for the elections. They're always going to get the short end of the stick here. But I think from a rate cutting perspective, if you really wanted to influence the elections, you should have been cutting basically at the beginning of the year. By the time those rate cuts work their way into the system, you want to see the economy starting to reaccelerate. That's the time to do that. So I think those political accusations are a little bit misguided. And the Fed's pretty much an easy target for any of this stuff.
So we ran through the sectors that were acting well in anticipation of whatever size rate cut there is in store for us on Wednesday, Jack. And yet, and that may look like a good reading of the economy. And yet you also have what one of our traders last week called the face of fear market, which is you focus in on the record highs seen in gold and utilities and all these defensive sectors. How do you read the market message right now?
I still think we're getting into what's called the growth scare, right? I think when you see some of the defensive names starting to really do a little bit better more recently, some of the economic data has been more on the soft side. Yeah, it makes sense to maybe price in a little bit of that concern. We would really call that more of a slowdown, not slowing, maybe a soft patch more than a potential for a recession. But I think as we start to continue to move past the uncertainty with elections, uncertainty with regard to rate cuts, you're going to see a little bit of, a floor put in here. And if anything, we'd be looking at this as a soft patch and maybe an opportunity to actually put risk back on once we get past maybe the election drama in here.
It's Karen. Thanks for being on. I can't pronounce your last name, but JJ. I'm sure you get that a lot. Sorry.
That works.
So I am a relatively new member of the 50 basis point cut camp. I wonder, though, how much do you think is sort of priced in the market already, and how much does Powell care about what's in the market already?
Well, I think the markets, like we talked earlier, it's still, a little bit better than a coin toss for 50-50. But, I think we're going to get the messaging that's going to be very important here. What does Powell say on the press conference? What does that SCP, what do the dot plots look like? Because if you start to think about something more along the lines of 25 and the SCP is showing 100 basis points worth of cuts, you're going to have a lot of questions there. Well, if you're saying you're going to end up having to do a 50 between now and the end of the year, and you're only doing 25, why aren't you doing 50 now? So there's going to be some, I think, language and a little bit of communication that's going to have to be, threading that needle, so to speak, once the announcement comes. And, hopefully Powell can navigate that. He's done a pretty good job recently of doing that, but this one's going to be a tricky one, I think.